banking business models are changing on a daily basis as regulation takes hold. Jeremy Anderson of KPMG joins me with his thoughts. It's dizzying, isn't it?
I think it is astonishing, and what is astonishing is, if you think about where we've come from for the last 5 years, which was mainly the balance sheet side of it, now we'll see for the next 5 years, I think it's really driving down into culture, governance, compliance, and the whole question of actually how can we grip these large financial institutions and really make them operate effectively.
What does it mean to be a banker today? You have to be a policeman, the higher authority on all things morality based. I mean, it's really the breadth of coverage of what it means today has changed.
We're not going to be bored in the industry for a long time. What's astonishing to me is wherever I go in the world, clients tend to talk about 5 different issues, one of which is regulation. Particularly we start with that always in North America or Europe because it is shifting business models so much. Then cost and efficiency because of this whole question of how do I get my margins up and drive my ROE back to acceptable levels. Third, I think, is the search for customers and growth. And the fourth one, which has been in Asia Pacific, particularly sort of China and Singapore for many years, but I think has really hit home in the last 18 months, is this whole question of data, technology and the fintech revolution. And then the fifth one is, everybody says, how can we change our organizations faster, whether that is local to global, global to local, technology, process, culture.
So tell me, what is going to be the next banking model that emerges in this evolving marketplace?
Whether we think it's good for global business, which I don't, or whether or not, I think we're going to see much more focus on local subsidiarization and local management.
Does that mean M&A? Are we looking at global restructurings from that perspective?
I think it's going to cause people to look at their portfolios because they're going to shine a spotlight on how profitable are these organizations as standalone entities.
I have spoken to some of the leading banking officials here, and when I talk about liquidity issues, everyone sits up a little straighter, and it really hits at the heart of what they do, right? How are they going to overcome the obstacles in the days ahead?
I think the liquidity issue is really challenging because what you've got is the global regulators, I think, have designed the liquidity rules for markets which have got deep liquid bond markets, sovereign bond markets, corporate bond markets. And what's actually happening is you're now getting those applied to economies where there just isn't that market depth.
Right. Tell me, what does transparency mean to you? And is it different to a person who sort of works for the industry rather than someone in the industry?
No, to my mind, all the industry participants are completely aligned on wanting full transparency. I don't know any banker who is not worried about the trust agenda. And I think that they see that if that's going to be delivered, the most important thing is no more bad surprises. And the way of reinforcing it and keeping that is through what I would probably call culture, but I think other people are calling transparency.